If you're a founder trying to raise capital, you'll probably hear people throw around the terms angel investor and venture capital, like they're the same, but they're not. And on this video, I'm gonna show you exactly the main difference between an angel investor and venture capital and what might be the best fit for you.
Best.
Because picking the wrong one at the wrong time could kill your momentum, or much worse, could kill your company. So today I will break down exactly what an angel investor is and what a VC is, the key difference between them, and know exactly which one makes sense for your raise. Let's get started. So what are angel investors? Let's start with this topic, okay? Let's start with a small one so we can go to the bigger one. So angel investors are usually high net worth individuals investing their own money. Not a fund, not a committee, just them. They are working very hard to make their capital and they want to invest it in different assets and the private market, so startups must be one of them. So they tend to move fast, they write smaller checks, usually anything between $5,000, $10,000 all the way to $250,000 and more. And they care more about you than just numbers, your market opportunity, and what you're looking to do. They typically believe more in founders than just going after a market. They're often your first believers. They invest early, often pre-product or pre-revenue, and they're usually betting on the founder, as previously said, not just a spreadsheet. So use them. What I recommend using in angel investor is when you're raising between $250,000 to $1 million, you have momentum, but are not enough traction for VCs, and you want flexibility, no board meetings. So when you're getting started, you always want to start with angel investors, family and friends, and anyone with your network that can actually invest. Let's move now to part 2. What are venture capitalists? So now let's talk about VCs.
Let's talk.
Venture capitalists invest other people's money, usually from limited partners, LPs like pension funds, family offices, or institutions. They operate from a fund with a mandate. That means they move slower, they need bigger outcomes, and they will likely want control, board seats, better rise, and structure. But they write bigger checks, anything around $250,000 all the way to $10 million plus, typically around the $1 million to $10 million plus. But of course, you can find all cases scenarios, because you can also find angel groups and you can also find smaller VCs that are similar to angel groups, but that will be another discussion. So let's focus on angels and VCs. And they bring networks, co-investors, and resources. So it's always quite worth it to get a VC in your startup if you're looking to scale quite quickly. If you're not, let's stick to angels. So use them when you got traction, uses revenue growth, you're ready to scale aggressively because they want to see massive return on investment, and you're solving a $1 billion problem. If you're solving a small market opportunity, you should focus on either not raising capital, bootstrapping, or raising capital through your community, or just raising capital from angels, because VCs are really looking for the next unicorn. So remember, they're betting on a 10x plus return. If your raise doesn't fit the narrative, you're not a fit, and that's okay. So the key difference between angel investors and venture capital. And here you can see a graph that shows the difference. So the money type, angel investor is personal, they're putting the hard working money. Venture capital is other people's money. So they are taking a percentage of the return on investment that they give to those LPs or funds where they get the money from. So keep that in mind. Check size between 5K, 10K, 250K, and then venture capital 1 million plus. Let's put it that way. Speed, angel investors can be very fast. If you convince them in one meeting call, there you go. You can get the money on the same day. Venture capital, they take a much longer process, and it usually takes a relationship and a lot of understanding of your company before they even invest. So what I recommend from venture capital and even angel investors is start creating your investor newsletter now. So control. Angel investors, they just want to understand what you're doing. They want to kind of hear from you on a maybe weekly base, monthly base, or quarterly update. But venture capital, they're going to be on top of you. They want to know what is going on. Not all the venture capitals are like that, but a vast majority are. When they invest a lot of money, they want to know that everything is working well. And then use case. So angel investors, you might not even need to have a product. You can have just an idea, and they will still believe on what you're building. For venture capital, they want to see real traction. They want to see if you're ready to take a lot of capital, they usually want to see product market fit, and then you're ready to take a lot of percentage of your market. So let's ask the next question. What should you do? Here's the truth. You don't need to be one of the other. The smartest fund use capital stack. So angels to get started, VCs when you're ready to scale, even retail investors to build community and brand, which is exactly what we do. So we do a combination of capital stacking. So if you're interested in learning more about how we help founders raise over $85 million and then going into $210 million after our partnership, just book a call with our team below. But let's focus on what you should do. My recommendation is doing capital stacking because it will be a mix of several kind of investors, and then you will figure out what is the type of investor that works best for your company. So the point is, raise the right capital at the right time from the right people. Don't just try to raise as much capital as you possibly can, raise the capital that you need. So if you want to learn more, at Space Funding, we have helped founders raise over $85 million using smart investor funnels and digital campaigns. So what we do is we utilize capital raising. If you are interested in learning more, I hope you enjoyed this video, subscribe, and if you want to work with us, just book a call on the description at the bottom. I see you next week.